My name is Felicia Triska as Corporate Secretary Associate, and we really appreciate you for joining us, and we are looking forward to sharing our company performance with you. We will start with an overview of Spindo's performance for the first half of 2025. After that, there will be a Q&A session led by Pa Johannes as Chief Strategy and Business Development Officer, Corporate Secretary, and Investor Relations. And also with Pa Teja Sukmana Hudianto as Vice President Director. Okay, now we can start. Okay. Okay, so the first half of 2025, our revenue reached 2.61 trillion rupiah, representing a 6.5% decline year on year, mainly due to lower hot rolled coil prices that are starting to decrease slowly to around 440 USD per ton. However, gross profit improved to 521 billion, rose 5.9%. And also gross margin expanded to 19.9%, a 230 basis point improvement from the previous year, supported by better product mix and a strong cost discipline. Net profit increased modestly by 1.8% year on year to 213 billion rupiah. This reflects our ability to protect margins and deliver steady earnings despite distribution and financing cost pressures. We maintain strategic control over our expenses. The general and administrative costs declined by 7.4%, while finance costs rose due to our shift toward long-term sukuk and bonds. This shift, though increasing near-term interest costs, significantly reduced refinancing risk and aligns well with our long-cycle project nature. Our selling expenses increase in tandem with project-based logistic activities. Despite these pressures, we sustain profitability, highlighting our resilience. Okay, now we move on to the liquidity ratio and leverage ratios. Our liquidity profile continues to strengthen. Our cash and equivalents surged to 809 billion rupiah from previous year's 503.6 billion rupiah. Our current and quick ratios also stood at 284% and 87%. We reduced also our short-term bank loans by over 400 billion rupiah, replacing them with longer tenor instruments. This adjustment improves funding visibility and supports our multi-year investment cycle, including the development of Unit 7 in Gresik. Now, our operating cash flow was at 691 billion rupiah, primarily from strong collections, totaling at 2.94 trillion rupiah. We invested 248 billion rupiah in fixed assets during the first half, aligned with our full-year capex guidance of 700 billion. Unit 7 remains a key priority with two new ERW machines, including the 8-inch and large diameter machines that can produce up to 24-inch diameter pipe, scheduled to that are scheduled to commence in 2026 and 2027. Now, our return on equity and return on asset stood at 8.3% and 5.1% respectively. It is a solid performance considering the softer hot roll coil environment. Our earnings per share also reached 30.3 rupiah, setting a strong foundation for the full year of this year. We also remain committed to shareholder returns with dividends rising consistently to 6 rupiah this year, from 6 rupiah in 2020 to 16 rupiah in 2024. The payout ratio was 21.3%, and the dividend yield reached an all-time high at 5.9%. Now we move on to the sales volume and product mix. Sales volume remains stable at 158,000 tons, but our product mix improved significantly. We scaled back on low margin products and expanded on higher margin and high value segments, including the API pipes. Now we can see that the spiral API pipe surged over 700%, lifting oil and gas contribution to 10% of sales, double from the previous year. Our strategy focuses on value over volume, and the shift is already supporting our profitability trajectory. Now we increase our local raw material purchases to 44% compared to 29% in the last year, reducing our exposure to international logistic risks and foreign exchange volatility. The entrance of new domestic suppliers such as Lautan Steel and Dexin Indonesia has strengthened our procurement base and enhanced cost competitiveness. Now this is the HRC price. We can see that the black pipe black pipe average selling price still maintains a healthy margin over local and imported HRC. We can see that the imported price started to increase around March, and it surpasses the local HRC price. Now going forward, this is our updated picture of Unit 7 in Gresik. This is the warehouse, and this is also the structure for the production house. Now this Unit 7, as I already said before, is going to have two machines, including a small diameter machine for pipes up to 8 inches and large diameter machine up to 24 inches. The large diameter machine will have a monthly capacity for up to 50,000 tons, and the small diameter machine can produce up to 20,000 tons per month. Now, Pak Jo, you can take the market outlook.
Yeah, thank you, Priska.
Okay. Wait.
Okay, basically on this presentation of result, I would like to a little bit of emphasize the reason we are progressing on the Unit 7 investment. Yeah. No, go ahead, but yang tadi. Yeah, so the government of Indonesia is aiming to reach energy security, ketahanan energi, and by that there's a lot of advances. There's a lot of program that support our decision for a large diameter investment. We can see here there's several projects which is nominated to be strategic national project, project strategic national, which in the end support the demand of oil and gas pipe. Yeah. Next. So even though we are entering a new era here, you can see that basically all of the countries now going to be more privatized. Yeah, privatized as in they go for their own internal resources. Um, Not excluded is Indonesia. Of course, there is several challenges, yeah, by several countries, but in general, Indonesia needs to be independent. And if we a bit more cautious, a bit more detail about the current agreement with the US, I will not discuss about the data export, etc. But let's focus on the oil and gas. Yeah. The fact that Indonesia is really lacking and really require oil and gas equipment from US is us also will have positive impact on our product. We know that Indonesia is lacking land and sea rigs for drilling, and that will eventually improve the lifting as well as the requirement for transmission and distribution pipe. Next. In Indonesia, supposedly we say gas and oil because Indonesia is very rich in gas resources. There's a lot of gas resources and new discoveries as well. This again leads to the future demand for our oil and gas pipe. Next.
Okay.
And I need to mention previously, as you can see, the sales of oil and gas pipe API standard product is already increased. Yeah. So this is a proof. So at the moment, our strategy is on the right track and on the right timing. Okay. Back to you, Priska.
Okay, thank you, Pajo. Okay, now we move on to the ESG. This is the update for our KPI for SLB, which is the installation of solar panels. As of June, the solar panels at Unit 1, 2, and 3 was successfully completed in February. And we have increased the capacity to 178.9%, which is for melampaui, uh, which is yeah it's far from the it's yeah from the target. Now the system is currently awaiting the issuance of SLO from the Ministry of Energy and Mineral Resources and PLN before commencing operation. Now this is our project for the CSR, which is supports the SDG of clean water and sanitation. We have also just recently in uh where is it, Pajo, in the new CSR project?
It's gonna be on Gunung Kidul.
Ah ya, Gunung Kidul.
Person.
Okay. Yeah, this is our commitment for this is our commitment to have annual CSR project. Wait. Now the guidance, Pajo,
Okay,
maybe.
so yeah, so we can see here the red line is the projected net profit, while the blue is the projected net sales, and the green is projected gross profit. Yeah, you can see that there's a big big impact on the big increase on the net margin, on the net profit. Yeah, this is mostly due to the operational of the Unit 7. You can see that we estimated the effect will be happening in full year 2027. Yeah. Again, I have to emphasize that this projection based on the assumption of only 7% utilization rate of the new machineries, because we want to be very conservative, and only by using only 7% is already enough to increase the profitability and the project worthiness. Yeah. So beyond that, we still optimist that the yield will be even higher, but that will be a blue sky projection for us. Yeah, I think that is for the forecast.
Okay, thank you, Baju. Um, and this is our selected projects up to June of 2025. As we can see that there is more projects on oil and gas and also in logistics such as ports and dams. Okay, thank you for listening to the overview of first half of 2025 result. Now we can move on to the Q&A session.
Okay. Thank you, Priska. Now, first question from Pak Hanso. How SPINDO optimize product capacity for MTO and MTS? MTO itu apa ya? Pak Hanso mungkin boleh dibantu MTO biar nggak salah. Oh, make to order. Okay, yeah, just to ensure. So basically, make to order and make to stocks. Yeah, product is roughly 50-50. Yeah. Because if you can see from the product group, yeah, piling pipe, spiral pipe non API is maybe 80-90% is made to order. Automotive is made to order. Yeah, furniture maybe half of it is made to order. Metal stock is roughly made like water pipe. Yeah. All is also made to order. So approximately 50-50 is made to order and made to stock. Yeah. Um, what factor that we should monitor regarding fluctuation of HRP price in the future, and how will it affect the company's top line? Basically, our top line or our revenue is definitely affected, yeah, by the movement of hot rolled coil price, yeah, of the steel price material. However, the impact will not be congruent, yeah. So if we see, Priska, mungkin please show the first slide again.
Okay, Pak. Wait.
The first slide.
Yeah.
Yeah. So as you can see there, maybe it's a bit small, but the overall hot roll coil price in 2024 is roughly 600. Yeah. So lowest is still 520. Yeah. So it's ranging from 620 to 520. So the average would be around more than 500. Yeah. Whereas in the lower side, yeah, lower side is the 2025. The hot roll price is in the band between 440 and 480. So that's a significant average down of the hot roll price, or hot roll coil price, yeah. Maybe approximately 25%. But you can see that our top line, yeah, it's not affected too much. Yeah. This is that's the the proof that our top line is affected, but may not be in the similar what you call it, in similar degree, yeah, with the hot oil price. Um, So how does the company view the demand outlook for its product amid the slowing GDP growth, and how does it plan to optimize inventory turnover? What is the reason between increase and plate and product? Okay, the demand for second half, okay, historically it's better than the first half, and we understand that a lot of our colleague, yeah, a lot of our colleague in other industries see weakening in the economy purchase power. We are grateful that for the first half we still be able to record growth. Yeah. So at the moment we don't see any significant aspect, yeah, or any significant deteriorating on the future demand, especially for the last month whereby the sale price is increasing. We still see the same, or we still see the normal improvement in sales. Yeah. So we do hope that nothing extraordinary in the second half, and the sales will be normalized. If we see first 2024, yeah, first half, second half, 2023, first half, second half, yeah, apart from unconditional, yeah, apart from the anomaly amount, but roughly first half again, second half is more like 10 to 20% on average. So we do hope that this second half of 2025 is better. Um, Maybe Pak TJ, you wanna add on that on the second half projections, Pak?
Yeah, we just seeing some movement in the second half. First, maybe also project base. You see a lot of projects coming. Yeah, so we hope we can also get make some conclusion, make some deal for those kind of projects. But for other is the mood, right? The buyer moods. Yeah, we see because of the before the price is going down, the price of oil is going down. I think a lot of people still prefer to wait and see. They didn't want to buy so much quantity because they're afraid if they buy and price drop further and they will lose money. And now a bit different because of the this from I think last month the steel price in China suddenly increased quite a lot. I think totally it's always increased almost $60. $60 is almost 1,000 rupiah per kilo. So it's a quite huge increase. So we still watching also one maybe because of the a lot of like the issue about the government very keen about the oversupply in China, and the government also is already gave some instruction for the steel mill to reduce their production. So this is one of the issues. Secondly, also the issue of several event and makes the government to restrict some production in Beijing area. Yeah, this is also another issue. And the mostly because of that, and also because of the I don't know, we still watching whether the demands in China is really increased, but some numbers like the PMI numbers is getting better in China. So we will see. Hopefully also because of the tariff negotiation also with the US is already concluded, and China also gets not as much like before, and maybe there is also some potential China can still keep some numbers of the export to US area. And this is also give some maybe some hope that the demand will recover. Yeah. So we will still wait. We will still monitoring this kind of situation. And one thing also supported by local steel company also in Indonesia. Some local company already increased the price also. This is made some new become quite different, and people start to buy with their hope. They're worrying also maybe if they don't buy, then they will late and price will increase more. So that's why second quarter will be great.
Thank you, Pak Teja. The next question is, what's the reason behind an increase in strip and plate product lately? Okay, we have one project in Sulawesi that require a lot of strips and plates. Yeah. Maybe Pak Teja, you wanna add a bit on that, Pak?
Yeah. So now currently we also have a good relationship with the Jinsan Group. So Jinsan still developing so many projects in the Morowali and in Weda Bay. So this we get some inquiry, a lot of inquiry from them, to supply this kind of a plate.
Okay. All right. So the next question is, we also do we make similar product with Suni?
No.
How much the contribution to the volume in this year? So I think Suni, which you refer to, Suni Nur Pratama, yeah, which is its business is in equipment of oil and gas, yeah, not only pipe. And some more, they produce seamless pipe.
Yeah, seamless pipe.
Yeah, and the production scale or the company scale is much different than us. How does the viability for sales volume look like in the second half? I think that's already in the answered. Your projection on the oil and gas contribution for 2026 and long term. Okay, for long term, we do hope that oil and gas sector can contribute up to 20% of our sales. Yeah, but for 2026, I think they're not much. They're different from now, maybe 10 to 12% due to the just operating of the new smaller machine. Does the company see a benefit from higher fiscal spending in the second half? Yes, of course. Yeah. So the government spending is not strong enough in the first half, but we do hope that on the second half it will improve. Yeah. About the dividend policy, Pak Teja, I think as mentioned before, yeah, we do have a set of target of 25 to 30% dividend payout ratio, but due to the fact that we are under the process of investment expansion and some uncertainty in the current economic market, so for the last period we decide to distribute approximately 21%, same percentage like last year. Can the company further increase domestic sourcing for hot rolled coil next year? Yeah, I think I need to also take note that the slide of the price of the hot roll may not be accurate. Yeah, we will check that and revise. But it is true that the local or domestic hot roll coil portion is increased. Now, I think Pak Teja, we would like to add more on our policy on the import and local decision making on the hot roll coil sourcing, Pak. Go ahead, Pak.
Yeah. Basically, import is, of course, if there is several, the product cannot be produced in local, then we have to import. Yeah, some products still have some quality issue. Yeah, for example, for automotive, the local companies still cannot supply the product for automotive. Great. And secondly, also some weight and some thickness. The local company also still have some limitation. They cannot produce, and we have to import. But other than that, so our import is always based on the price. So if local price and the import price not so much different, we prefer to buy from local because to avoid the currency risk. And secondly, also like currently import and local, the difference is also delivery time. Yeah, local delivery time is much more faster than the import. Then for us, it's much more easier to control our inventory with faster delivery. rather than the like a 3 months delivery. This is our, so if local have more competitive in price in future, and currently also local basically is also quite already become competitive because of the local competition also become tougher and tougher as make the price also become more competitive and almost not so much different if compared with the import from China. So then means some potential will use local more than import as long as the price is still they maintain this kind of similar like the import price. Yeah.
Okay, thank you, Pak Teja. A bit more question on the hot roll price. Going forward, what do you see on the hot roll coil price trend, Pak Teja?
This is also a question is not so easy to answer because of there is two factors basically make coal price one up and down. Of course, based on the fundamental things, the coal price is always depend on the supply and demand, right? Yeah. So currently, if you see the still basically still hot coil supply is oversupply. Yeah, all over the world. I mean, not over the world. I mean, if global, if the totally in the world is still oversupply. Oversupply is mainly from China, and now also come from Southeast Asia because of a lot of new mill start production already. This is give a big pressure. But secondly, is the demand, right? If the demand recover significantly, then maybe the supply and demand will be almost can be a little bit close to the balance. Then if and secondly also third is this is the regarding the capacity. The third is how the mill can maintain the production level. So if the mill can maintain production level in the low side, I mean in the not in the high side, like maybe 70% utilization, then maybe it's still okay, not so much pressure. And secondly, the other things is so of course competition, right? I mean, the cost, every meal have a different cost. We see some like the European, especially in the East European, still using old meals. They cannot compete. Some already give up, like ArcelorMittal already closed several meals in Eastern Europe. Yeah, in UK also last time, the Chinese owner also want to close the steel mill in UK, but the UK government didn't allow. That's why I don't think UK government can run the mill with a good operation and good cost. And other than that, the consideration about Europe. Europe is the problem is the gas price because of the Ukraine and Russian war and sanction to Russia. Then before they can import gas from Russia with a cheaper price, but now they cannot. Now the gas become almost like a triple, the price compared before war. They then make the European market is not so competitive. That's why now European also a lot of them prefer to import semi-finished like a slab billet from Asia, because the gas cost is too expensive. So they stop the smelting and they prefer to import a semi-finished product. That makes some demand, like a balance between the supply and demand. So it's not so easy to judge. So we will see time to time the movement of the price. Yeah, so we just cannot predict and believe what the price will go down and or the price will go up. Yeah, we will watching every day price.
Yeah, thank you, Pak Teja. I know it is a very difficult question. That's why I move it to you. And thank you for letting us know every day. Yeah, just for your guys, just for information for all of us. Pak Teja always monitor the coil price. Yeah, sometimes 2 or 3 times a day, especially when the price is fluctuating. So anyway, thank you, Pak Teja. Some more question on the Unit 7, yeah. Please give us some more insight about the impact of those new investment on the revenue, sales volume, and profit margin efficiency, etc. I think we have been roughly generally explained this. So the unit 7 will be greener. Yeah, unit 7 will be greener. Definitely have better efficiency because it's more automated, more digitized. The sector would be oil and oil or on the oil and gas sector as well as the infra and construction, which have a better margin. Okay. Another question is why Spindo keep issuing bonds and borrowing from banks? Is it the profit not enough to cover company expansion? Yeah. And what is the Spindo strategy to increase the return of equity? Yeah, I think one thing I have to emphasize that we are reducing our debt exposure. Yeah, of course, again, increase or reduce is not merely considered by the number, by the aggregate number. 1 trillion can be big or 1 trillion can be small. Yeah, again, I think as an educated finance person, we should see that as a ratio. Yeah, so if you can see the ratio of debt to equity is keep decreasing, meaning that the portion of the debt is reducing. Yeah. The reason why we use both capital market and banks is to try to obtain the best solution, for Spindo, because we need long and short term combination of liability combined with the flexibility, of the bank facilities. So by achieving the best solution or the best composition, hopefully Spindo can obtain the optimal cost of fund. Yeah.
So
Not
activity.
sorry, Pak.
Yeah. So basically, so we didn't reduce the bank facility. So we reduced the outstanding, not the bank facility. So because the bank facility used mostly for our trade finance,
Yeah.
for our facility to import the material. As you know, our utilization ratio is still about like 50%. It means still a lot of potential for us to increase our production or increase our sales.
Yeah.
So we still need this kind of bank facility. So especially when our Unit 7 also running, so we will need more material also. And so that's why we still keeping the facility from the bank. Hopefully then we can use more also possibly. But outstanding we will reduce it. Yeah.
Yes.
Yeah.
Correct, Kak Teja. Yeah. Thank you for emphasizing that. Yeah. Jadi, so we please do take a look deeper at our numbers. Are we confident that we can sell? Yeah, I mean, the Unit 7 products. Yeah, well, you can see that as of now, at least for the first half result, the fact stated that the oil and gas is improved double. Yeah. So as again, that's one of the reason we are quite confident that we can sell as a result of our other efforts. Yeah. Like approaching to the project owner, etc. But eventually the numbers give us some confidence as well that our decision is correct.
Yeah, basically Unit 7 also have a unique product because of the machine we buy. It can produce the product that we don't produce now. Right? It means there's a new product we will do. Then we can sell this kind of new product like 8-inch. We still have another 8-inch, but this 8-inch can produce the thicker gauge. Yeah, so all size thicker gauge like a Schedule 80. So it's, I think no other Indonesia company can produce this kind of the thicker gauge. Yeah. And also 20-inch the same. So we have also another product like not only for oil and gas distribution, like a 5L, but also for oil and gas for casing and tubing, for drilling. And the other is the product for small pipeline, and for column. Yeah, this is all the new product. We hope so we can do we can give some like more choice for the Indonesian customer to buy, not to import.
Yeah, I think I also need to emphasize that Unit 7 machine, even with the same product that currently can be produced with our machine, the cost will definitely be lower because the machine is newer, faster, more efficient, more automated, yeah, etc. So even with the apple to apple product, the cost of to manufacture will be better. Ya Pak Teja ya, betul ya?
Okay.
Yeah, thank you. I think last question for today, again on the hot roll coil. Is it our intention to purchase more locally, Pak Teja?
Yes, of course.
Yeah. Yes, I believe we also already answered that several times ago that we actually favor local and domestic raw material because it's easier to manage and shorter delivery time as well as that. But of course, there is some constraint and challenges from the local producer. But it is our intention to increase local and domestic sourced raw material. Yeah, I think we cover all of the questions, Pak Teja. Thank you. Back to you, Priska.
Pak Jo, Pak Hendy, raise hand.
Okay, go ahead, Pak Hendy.
Pak Hendy.
Oh
Hi,
iya.
Pak Jo. I have a few questions here, Pak. Pak, if I look at the hot rolled coil price, your ASP in the third quarter, your ASP decline is not as steep as the hot rolled coil. So I'm just trying to understand what kind of like product mix that's been changing. Why is your ASP doesn't decline as much as the price of your raw materials? I think that's number one. And should I think about margin per ton, or like how should I think about your margin? Because your margin seems to improve, but despite the SP going down, right? So I'm just trying to understand that. And then I have two more questions after that.
Okay, Pak Teja, you wanna take that on the how can we maintain our price strength in the event that hot rolled coil price is declining?
Yeah, basically, there's a secret. That's why we can perform. It's always during like a price drop. Of course, price drop is usually is driven by import, right? And then we, of course, we didn't want to follow. We will see the market very carefully, how much the inventory is there, yeah, and how is our competitor showing, how much our competitor have this kind of material also. And we will carefully, of course, we will reduce the price, but we will not reduce the price according to the drop of the material price. Yeah.
Yeah, thank you, Pak. So again, on the margin side, of course, due to the broad range of our products, it's not easy to simulate or make a financial model on our margin. But I can maybe give a hint that by concentrating on the four kind of pipes that we produce, namely construction infra utilities pipe, automotive pipe, oil and gas pipe, and furniture pipe, with each of its range of margin, because the margin of the product is not only depend on the raw material on its or its manufacturing cost, but it also very much depend on the competition, on the related projects or on the related area, something like that. So maybe it's a bit complicated, there's no straight answer, but as we discussed, there's a range for that, and the highest range, of course, in the oil and gas pipes.
We have
Pak,
window.
for simplicity, is it safe for me to assume your margin will continue going up?
Yes, Pak. Because especially until 2027, whereby we do hope that contribution for oil and gas sector is increased.
Okay, Pak. So in the third quarter, kan, Pak, I have seen hot rolled coil price starting to go up. is it safe to assume that your increase in ASP will not be as high as the increase in hot rolled coil, given that when the decline, you don't decline as much?
Increase on the ASP is not as high as increase in the, yeah, of course, the fluctuation of the raw material will always be more volatile than our sales price. Ya Pak Teja ya.
Yeah. I mean, raw material is also we will have to calculate our inventory, right? When the raw material price increase, of course, our inventory price not increase so high, right? That's why we need to be very carefully when we increase the price of the pipe price. So we will because sometimes raw material price also will drop. The timing we don't know, right? That's why so we have to be very carefully give some like a guarantee to our customer, and customer can buy without worrying the price we increase too much and after that drop very significant.
Yeah, because it's not a cost plus formula, Pak Hendy. It's a combination of factors.
I think we have the strong in these sectors because we have the inventory. That's why the customer like us, because we can deliver the material very fast compared to our competitors. The customer side, they don't have so much risk about the price fluctuation because if they have a project, they have inquiry from the customer, they can buy very fast. They can buy from us and deliver to their customer. So this is also one of our strong. Yeah. Our strength.
Understand, Pak. Pak, I have two more questions, Pak. Unit 7, Pak, how much tonnage are you planning to run? At full capacity, how much can Unit 7 in terms of tonnage can they do? Say every year now you do about 300, right? 300 million ton. So I'm just trying to understand Unit 7, how big is Unit 7?
Okay, so capacity-wise, we will add 2 more machines with a total capacity of approximately 60,000 ton a month. Yeah, combined. Yeah, but of course that's the capacity. But in reality, the assumption we make for our projection is that new machines will produce approximately 1,500 to 2,000 ton additional products per month. Yeah. So very conservative, Pak Andy.
2,000 a month means 24,000 a year. So it's not significant compared to your overall volume,
Yes.
yeah, Pak. Your overall volume is almost 300 million, right? Yeah,
No,
350.
330 to 360,000 ton.
So this is like not even 1%, yeah, Pak.
These
Yeah,
are conservative projection.
yeah, that's the conservative projection, Pak.
Okay, understand. Okay, Pak, I have one last question actually. Your target, Pak, it's your revenue and net profit target this year, the 7 trillion plus, I think, if I'm not mistaken. It's a bit hard to achieve, right, Pak, given that the 7.2 trillion is hard to achieve given that in the first half the steel price is down, right? Are you planning to revise your guidance both on the revenue and the net profit for this year?
We will be still evaluating the guidance, yeah, but as I mentioned numerous time, our target is more on the volume and the bottom line, the profit and the volume. Because top line is very hard to determine, because there's a effect of the fluctuation of the hot rolled coil. And
So
just now,
the bottom line of 600 something, 612, you're still comfortable with, kan, Pak?
yeah, that's why we only enter first half, yeah, and not even with only 1 month, yeah. So at the moment we still consider we can achieve the target.
And what's your volume target, Pak? Your volume, because in the first half it's flat, right? First half this year compared to first half last year is flat. So what's your volume target actually good for the full year 2025?
Yeah, again, our volume for the first half, yeah, year on year is increased 1 something percent. Yeah. So the full year, as I mentioned, we do hope that the second half will be better, and we do see there's improvement on the July. So yeah, I think given the last year volume was approximately 330,000, yeah. So I think The target will gonna be 380,000 or something like that, around that.
Okay, so it's still like some feels good ya Pak belasannya.
Yeah, yeah.
Okay, sure. Okay, Pak, I think that's all my question actually. Thank you so much.
Thank you, Pak Andy. Yeah, go back to you, please.
Okay, thank you, Pak Johannes and Pak Teja, for the insightful conversation. Now it's the end of the result call. Thank you so much for the participants for joining this analyst meeting today. And we are hoping to share more of our Spindo's performance with you in the future. Good afternoon and have a good day.
Wait, please.
Huh?
Yang itu, Unit 7, preview.
The video?
September. No, September 16.
Oh yeah. And we are also want to announce that we have a factory visit on the 16th of September of 2025 to Unit 7 in Surabaya and also Unit 6 and Unit 4. If you want, the registration is not yet open, but if you want to ask more about the visit, you can contact me in the, let me share my email. Now you can ask about the visit through this email. Okay,
Okay, thank you, everybody.
thank you.
Thank you. Thank you.
Thank you, thank you.
Thank you, Pak.
Pak Jo, Pak Teja.
Thank you, Pak Be.
Wonderful
Thank you.
presentation
Teja, Pak Jo.
and reply response.
Thank you, Pak.